Are you ready to make a killing from investing in the stock market? Well, you need to hear this. While it might not seem like it, there are actually golden rules you can follow to close profits from stock market investing. So if this sounds like something you're interested in, stay tuned to learn what you need to do to keep yourself from throwing a wrench into the whole exercise. Welcome to this channel, the place where future billionaires come to get inspired. Alright, so what are these 15 golden rules of stock investing? Well, golden rule number 1: never lose money. Pretty straightforward, right? Our first rule of stock investing comes straight from the great mind of the Oracle of Omaha himself, billionaire Warren Buffett. In fact, the way he said it, rule number 1 is to never lose money. Rule number 2 is to never forget rule number 1. And isn't that just some timeless advice? I mean, think of it. Why would you lose money when the very point of investing is to grow it? But don't get it twisted. It's certainly hard not to lose money, especially on the stock market. What Mr. Buffett actually means by all of this is do not be blindsided by what your investment could potentially yield. You need to evaluate the risks, too. Basically, if the potential rewards don't outweigh the risks, your investment may not be worth it. And just to mention this perhaps explains why many investors today are avoiding long-term bonds like the plague. Golden rule number 2: start small and think big. You might have heard this one a few too many times, but big things start from small beginnings. So here's what this is all about. In case you're wondering, when it comes to stock investing, the trick is to start small. You must first test out the waters. So start by directing a small fraction of your savings or monthly income, whether it's $100, $500, or $1,000 to the market. And besides this, it would be best if you took the time to learn about the companies you want to invest in. Again, start small. Until you're good enough at identifying the best companies to buy shares of, ultimately you'll develop an excellent trading strategy that ensures you make it big in the stock market. Golden rule number 3: think like an owner. Another important rule to heed when investing in the stock market is always treating your stocks as businesses. And come to think of it, there is a good point here. Many people view stocks as some sort of gamble, forgetting that real businesses are behind them. See, at the end of the day, stocks give you a fractional ownership of a particular company. So you need to start thinking like a part owner of the business that you're investing in. That's actually how you make profits when the business performs well and vice versa. So what is thinking like an owner all about? You need to analyze fundamentals valuation and get an opinion about how the business will perform in the future. And don't forget to go for companies with an excellent management team, shareholder interests at heart, and an excellent financial and competitive position. Golden rule number 4: invest only in businesses that you understand. At the risk of repeating what we said, in golden rule number 3, you're not investing in a stock, but rather the business behind it. So what does that mean? Well, before investing in a company, understand how it makes money, its strengths, and even the risks it's facing. If you do not understand the business, you need to do one simple thing: let go. Word is that Mr. Warren Buffett had an opportunity to invest in Google before they came out with an IPO, and he let it pass. His reasoning? He just couldn't wrap his head around how the search engine could make money. And did this decision cost him profits he could have made? Absolutely. Alphabet Incorporated, Google's parent company, is now valued at $1.474 trillion. But all the same, we shouldn't forget that this technique actually saved him from far greater losses over the years. So from now on, you actually want to apply this to all of your investments. For instance, if you have no clue about how Tesla works, just stay away from it. Golden rule number 5: don't try to time the market. Ask any investment expert, and you'll learn that while you might have an excellent idea of the right valuation and price level of a stock, you should always refrain from trying to time when the market values it correctly. And here's why you can't do that. Because it's quite challenging to predict when a share will hit its peak or its bottom. As of posting this video, no one has managed to time the market, despite checking multiple market cycles. Golden rule number 6: be disciplined. There's a lot of discipline involved in successful stock investing. Let me tell you some more. After developing an investment strategy and identifying a stock worth purchasing, stick to them. After deciding on a target price and a stop loss, what do you do again? That's right, stick to it. And stick to your plan on how much to invest and what pace as well. Now, there's no denying that with money on the line, your emotions will undoubtedly race when the market turns volatile. And when that happens, it can be hard to stick to your plan. But all the same, you want to stick to the plan you forged with a calm mind. Run away from the kitchen if the heat is cranked up. Don't sweat it. Golden rule number 7: always invest only excess cash. Never invest all of your money in the stock market. And let me tell you why. The market is always volatile, meaning you're always in danger of losing money. That's why you only need to lose the extra cash you have instead of the cash you need for everyday survival. The significance of budgeting and planning your investment cannot be overstated. Golden rule number 8: keep tabs on trends. The last thing you want to do is invest in the stock market and just let it be. You need to be tracking your investments from time to time, because it's the only way to get wind of changes in the worldwide market that could mean trouble for your profits. But what if you can't do it all on your own? Well, you can always hire a professional and then provide them with specifications on how to manage your portfolio. Golden rule number 9: diversify your portfolio. Don't put all your eggs in one basket. That's an everyday adage that investors use, and they use it for a good reason. See, you need to diversify your portfolio to minimize the risk of losing your money. And exactly how do you do it? It's simple. By investing in both assets and instruments. For example, you could purchase an index fund like the S&P 500 and add a bond to your portfolio, or invest in a real estate fund. Golden rule number 10: buy and go long. Ever heard of the buy and hold strategy? Well, that's the best way to invest in the stock market, and it's essentially about buying some shares and holding them until you realize your target profit. Okay, let's go a little bit deeper here. So how long should you hold your shares to make money investing? Well, it all comes down to your TP, which is essentially your target profit or target period. Basically, if your target profit is 10%, close your trade when you realize that profit. And likewise, if your target period is 1 month and you see some earnings already, close your position and find another great opportunity. Golden rule number 11: buy when everyone is fearful. Most investors will often sell or stop paying attention to the market when it takes a nosedive. But don't follow suit, because that's when the bargains are out there in droves. That's right. The stock market is literally the only market when things are on sale. People are too scared to purchase. It's no wonder Mr. Buffett once said, "Be fearful when the others are greedy, and greedy when the others are fearful." Luckily, if you're a 401k investor, once you set up your account, you don't have to do anything else to continue buying in. It's an excellent way to leave your emotions out of the process. Golden rule number 12: be objective. It's so easy to have a best-case scenario in mind when investing in the stock market. However, when you set your eyes on the best, your decisions must be geared on an objective assessment of the investment opportunities presented to you. Essentially, all of your moves need to be guided by realistic expectations of returns, not whatever excellent results you're hoping for. Golden rule number 13: lock in profit. Often, locking your profit from time to time is another golden rule of investing, because it enables you to earn regular income. We've said this before, but the stock market is always moving up and down, so it makes sense to have some money to trade actively and to realize some profit from time to time. And don't rule out shorting. You can also profit from falling markets. Golden rule number 14: run profits, not losses. Have a trade that could be more profitable. Well, just let it be equally. If a trade is going wrong, why watch it get worse? Recovering losses is even harder than you may think. Golden rule number 15: learn from your mistakes. Our final golden rule of stock investing is to learn from your past mishaps continuously. And what does that mean? Basically, always have a record of wins and losses, because it goes a long way in helping you to avoid trip-ups in the future. And there you have it, bros. 15 golden rules of stock investing. But this list has us curious: what's the most valuable rule you've learned in stock investing? We love hearing from each and every one of you, so drop your views in the comments. And if you stuck to the end with us, we of course have one more bonus golden rule for all the viewers out there, and that is to stay grounded. That's right. When it comes to stock investing, the importance of keeping your feet on the ground cannot be overstated. Granted, you might have some good streaks, just don't let them go to your head. Okay? Now we're curious to know, what rules have you picked up from being a stock investor? Write down in comments. Thanks for spending some time with us today. We appreciate every single one of you. We'll see you tomorrow. Thank you for watching this video. If you found it valuable, consider subscribing to our channel and joining our awesome community. And if you're still hungry for more, we handpicked this video for you to watch next, or head over to our website for more amazing content. See you tomorrow.